Hello and welcome to another update video about gold. Yeah, market has opened, futures market has opened slightly up and the market is rallied into resistance. Yeah, we're going to take a look at that now. Bigger picture, I think, and I still think that we are in a bullish market in 2024. Already 2023 was quite bullish for gold and the metals market. Yeah, we had a significant low here in October 22. The market moved up in a wave 1, which I'm counting as an ABC structure. You can count it as a 5-wave move. I prefer the 3-wave move approach. It relates very well also to this move up, which also looks like a 3-wave move. So I can justify here, as we are in a 5th wave, in a larger degree 5th wave, I can justify that this is an ending diagonal pattern in which wave 1 already completed, wave 2 as well, and that allows us to calculate a target for the 3rd wave. We can take the length of the wave 1, compare it with the target of a 3rd, and it takes us to around about 2,400 plus, yeah, this 3rd wave. We can calculate that a little bit more precisely as soon as the wave 2 is over. The B wave. Because in the wave 3, we're dealing with an A, B, C structure because of the ending diagonal. Ending diagonal patterns are always, they are 5-wave moves, but within the subwaves, we have corrective structures. So at the moment, the idea is that an A wave completed, A of 3 topped here around early December, around the 3rd of December. Now we are likely in this B wave in our primary scenario. This B wave is, again, an A, B, C structure. The current parameters that are defined on this chart, they have been respected very, very well. The idea was that somewhere in this yellow box, we should see a reaction to the upside. This reaction happened at one of these Fib levels. It happened exactly at the 50% Fibonacci retracement at 1,988. Then the idea was that in the specified resistance area, first of all, we should get there, and then we should see a reaction there if the wave count is correct. And yes, a reaction happened here to this B wave top on the 28th of December, pretty much around the golden ratio at $2,089. And then the idea was we should form the C wave to the downside, which is also unfolding. We've seen lower highs and lower lows. The market has approached the yellow support area again, but is reacting already to the 38.2 retracement here at $2,026. The idea is we should still trend lower over the coming weeks. If I go to the 1-hour chart, then you can see that the market was, and that's been sort of my communication in the last update here. I think we were already in resistance. So the idea was we get into resistance in a wave 2, which is basically wave 1 down, wave 2 up in wave C, because the C wave is a 5-wave move. Yeah, the wave 2 rally occurred, already reaction to the resistance area. And as you can see here, a little bit of a reaction, nothing major though. And ideally from somewhere there, we start the 3rd wave to the downside. What would be a target for the 3rd wave? Well, we can calculate that. We take the length of wave 1, go to the high of the wave 2, and minimally I'd like to see the 1.236 extension at 1974 or a little lower. But that would be my minimum expectation. Also, I would have to change my perspective to something more bullish if the price gets a sustained break above $2,083. Usually, a wave 2 would not break above or move beyond the 78.6 retracement level. What would be my alternative count? Well, the alternative would simply be that this B wave here, which presumably topped around the 27th, 28th of December, presumably it never finished. I mean, in this alternative scenario, okay? So in the alternative then, we would simply see an extension and call this an A, B, C structure in a larger B wave. But in the primary scenario, the B wave topped here, end of December. We're now moving down in wave C. And I gave you the next targets to the downside already. We can also use the overall Fibonacci support levels in this overall support zone. And yeah, I mean, what would be a confirmation that this third wave has started? Difficult to say. I mean, ideally a 5-wave move to the downside, but that's difficult to detect on these smaller time frames. But a break below the 78.6 retracement level there of the rally would be good confirmation. That's at $2,028. Yeah, a move below that level would confirm that the third wave is unfolding. And then we've got support at 1988. And I gave you a target for the third wave minimum expectation. Yeah, but at some point then, once we have these five waves filled in, we should see a lasting low formed here in wave B, and then a third wave, or let's say a C wave rally within wave 3 should continue. We can also then calculate a target for wave C more precisely as soon as wave B has bottomed. That's my update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, check out our S&P 500 and stock service. You'll find the link in the description. Thanks a lot for watching. Bye bye.